Hello traders, welcome to Investoo.com's How to Trade Binary Options series. In this lesson I'm going to teach you how to trade binary options with Fibonacci levels. And I'm going to focus on the deepest or the deeper levels of the Fibonacci scale. I'm going to start by the 50, 61.8 and 76.4 because I think that the 28.3 and the 36.4 are just not deep enough for us to profitably trade binary options with. So let's go to a GBP USD 15-minute chart and let's start by learning about the tool. Okay, so this is the GBP USD 15-minute chart, and the Fibonacci tool is right here, where you have these horizontal lines, dotted lines, and this F. What you're going to do, you're going to click here, and if you're in a down move, you are going to draw it from the high to the low, okay? And this is how you're going to draw it. Now, you can see that we don't have the 76.4 right here, so we are going to, well, first of all, delete the 23.6 and the 38.2, and then we are going to add the 76.4, okay? We are going to delete also the expansions or extensions, and let me just add the 76.4, and in the description just write down 76.4. Okay, now these are the levels that we are going to be working with: the 50 Fibonacci level, the 61.8 and the 76.4. Now this what we're going to do, or the idea here is, after a strong move to the downside or to the upside, price will retract to these levels, okay? And once it does, it's going to continue on the direction of the trend. Now, of course, what we need to do first is we need to draw these levels, and then we need to look for the previous levels that were broken. Let me just change the color. No, I'm gonna leave the horizontal line black as it is. So you can see that the levels that were broken were these levels of support that were tested once, twice, then it was hardly broke to the downside. And what we are going to do, we are going to wait for price to hit these levels and the 61.8. Always look for confluence between a previously broken level and the Fibonacci level. In this case, this is the level that we are looking at, the 61.8. Now, price hits this level with this candle, and then we have a rejection candle, which is this red candle right here. So once we hit this level and we have the rejection candle, we have a signal to buy put options. We buy put options, and the entry level is when this on the next blue candle opens. Okay, so right about there, here, the blue candle takes us again to test the 61.8. But if you count 1, 2, 3, 4 candles after we enter the market, you can see that our option expires in the money. And basically this is what you're going to be doing with the Fibonacci levels. And always look for confluence, because remember that if you don't have a strong level to be tested and only the Fibonacci level, what can happen is that price will test the 50, just as in this case, but then it's going to break it, and you are never going to have a strong move to the downside. Well, in this case, or in this example, the downside, just because buyers are still trying to push price up, and the real sellers are going to be looking at the same level that I just showed you, the previously broken level in confluence with the 61.8 Fibonacci level. And when price is trading to the upside, you do the same. But when price is trading to the upside, you are going to draw the Fibonacci level from low to high. Let me just show you how you're going to draw it in an up move. Let's say that we pick this low and this high as the up move, and we are looking for a corrective move to the downside. So what you're going to do, you're going to do this. Okay, you're going to draw your Fibonacci level, and you're going to wait for price to hit these levels. And the levels that you want price to hit are these levels of support, or this range that previously was tested as resistance. with this candle and then broke to the upside, and you can see that price hits these levels in confluence with the 50 Fibonacci level. And when we get I would have to say that this candle, the red candle, I'm sorry, the blue candle, this second blue candle, we enter at the let me thicken this out for you. When we get this blue candle that shows rejection to the upside, we have a signal, and we go long or we buy call options right here at the beginning or at the open of this blue candle right here. Okay, the second blue candle, this one right here. And then you can 1, 2, 3, 4. This option also expires in the money. So you can do this in and day out. Just look for trending markets and just look for zones that price is likely to reverse to that confluence with Fibonacci levels.